I'm at REITWeek in New York, and today I'm talking with Frank Haggerty. Frank is Portfolio Manager and Senior Vice President with Duff Phelps Investment Management. So Frank, what are some of the potential concerns or questions that investors have today in the REIT market?
You know, that's a great question. We receive a lot of questions these days about valuations within the REIT market. As many people know, the REIT market has done extremely well over the last 2.5 years. Has seen a significant recovery in values from the lows of March 2009. And so clients are somewhat concerned as to, have they missed the run, have valuations improved too greatly relative to, where we are in the global economy. What we like to point to, though, is the significant recovery we've seen in asset values of commercial real estate over the last year and a half on the back of, a very strong credit environment. So the cost of capital has improved significantly for the broader commercial real estate environment, but also for the companies that we're investing in. And so on the back of that rebound in commercial real estate values, we believe that the move in the REIT stocks themselves have actually been well supported with that reduction in risk premium and cost of capital.
What about trends? What would you say are some of the trends in the REIT market that you're seeing?
There's two broad trends that we continue to see within the commercial real estate business, and they really have to do with both asset market trends and the space market trends. And so with asset market trends, that really refers to the transaction of real estate. We've seen a significant return of investor appetite to get into commercial real estate, particularly core real estate, high quality, grade A commercial real estate in gateway cities. A complete reversal in people's attitudes into investing into real estate. That's on the, and that is what's driving a reduction in risk premium into the sector, and so that's been very supportive of the valuations. But more broadly, if you look at the space market, that refers to the fundamentals of commercial real estate. Again, within that higher tier of Class A properties, you're starting to see fundamentals improve at a quicker pace than people would have otherwise thought. Particularly given the backdrop of the global economy, which people still find somewhat weak, the recovery being somewhat tepid. They're somewhat surprised about the fundamental recovery that we're seeing for high quality real estate in the U.S.
So lastly, let me ask, what type of advice would you give clients who are looking to invest in commercial real estate?
When we talk to people about investing in commercial real estate, we're very focused on the security side of the business, not so much on investing in private assets. But with that being said, we always recommend people look at it from an asset allocation point of view. It's not so much of a tactical decision, but more so of something that is a strategic asset allocation to the space. We find, just as NAREIT does as well in the work that they produce, that allocations to both private real estate, the buildings themselves, plus public real estate securities are complementary. They both offer positive attributes. And so we always are recommending to clients to think about an allocation somewhere between 5 and 15% to real estate securities over time. That's going to vary depending on the client. And then within that, up to maybe 50% of the allocation to ex-US or global real estate securities, which would give you the most broad and potentially the best risk-adjusted type exposure over time.
Well, thanks so much for talking to us today, Frank.
Thanks for having me, Carissa.
I'm Carissa Chappelle for REIT.com.